Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been pretty confusing. The renewed tariff threats for former President Trump and concerning inflation data overshadowing positive economic indicators. And those positive economic indicators are all related to earnings. There's been non economic indicator related to inflation that this week came out even slightly positive. The potential re-imposition of steel and aluminum tariffs, coupled with higher than expected inflation figures, fueled uncertainty and risk aversion. But there's a lot of surprises in price action, and this is due to Nvidia's upcoming earnings. So, while some economic indicators such as industrial production and retail sales, low jobless claims suggest a resilient economy, the negative signals are currently dominating the market narrative. Trump threats of reciprocal tariffs and specific duties on autos, chips, and pharma are raising concerns about potential trade wars and their impact on global worth. Meta's investment in AI-powered humanoid robots signals continued growth and innovation in the tech sector, offering a potential counterpoint to the prevailing pessimism. And also, discussion and potential meetings between Trump, Putin, and Zelensky raised hopes for a resolution to the conflict. However, the inflation front is pretty damn negative. Recent data points painting a concerning picture. The US CPI month over month actual came in at 0.5%, being higher than the forecasted 0.3 and really higher also of the previous one 0.4. So similarly, the US core CPI over month came in at 0.4, surpassing the forecast of 0.3 and the previous figure of 0.2%. Also, on the headline, we have the core the core CPI year over year at 3.3%, higher than the 3.1 and the previous 3.2. But not only CPI came in higher than expected, PPI came in also higher than expected. Month over month, 0.4, and core PPI year over year, 3.6. All these data came in higher than expected. It's a negative signal. These data points are significant as they suggest the inflationary pressures are not easing as quickly as anticipated. It's not only not easing, they are pointing higher again, which could influence the Fed's monetary policy decision. So this is why I'm saying that this week's economic data has been disaster. But a couple of earnings, Cisco, Coca-Cola, McDonald's, we have pretty positive earnings except for McDonald's, missed in both EPS and revenue. So basically, overall, I think the market, in terms of fundamental, has a pretty pessimism sentiment. 25 is my rating. Remember that this rating is exponential to both sides. Having less than 35, it requires a lot of negative data. This week, we had a lot of them. So the Federal Reserve officials also waited on the current economic situation. Jerome Powell reiterated a cautious approach, stating that they are not in a hurry to cut rates and emphasizing the need for more progress. Bostic also indicated a neutral rate around 3 to 3.5% and suggested potential for reaching 2% in early 2026. The expectations of rate cuts coming this year are more and more being pushed forward to October, November, December, if any. So, given these factors, the US stock market faced headwinds from potential trade war and persistent inflation, leading to increased risk aversion. But what we are going to see in the price action is completely different. We need to dig in why we have this kind of price action given this pretty bad sentiment on economic data. The first thing I would like to tackle is down here we have the market internals for both the ES and the Nasdaq. As we can see, this is the week in terms of volume in the ES. So as you can see, the Monday started pretty positive, then waiting for the CPI, and on the CPI and PPI, volume surged on Thursday. And the advanced decline line, you can see that we kept pushing and pushing on the S&Ps. Then if we change to the Qs, we can see even stronger signals of volume and advanced decline. Monday, Thursday, then on the advanced decliners, the dip on CPI was pretty bought up until Friday. So we are seeing really big buyers, big money pushing and pushing and pushing. That's why I told you on the last weekly recap that these kind of things are telling. This is a really big divergence on the actual economic situation, the actual rate cuts. So there's a big, I would say, I don't want to say manipulation, but there's a big involvement of big institutional players buying everything despite the economic data. No matter what, these guys are buying. So this is the daily. And as you can see, we were in a narrow range trying to buy, and we are starting to go towards 22,500's all high. This is what I'm reading in price action. We go a little bit lower on the 1 hour. Look at this. Look at this. Drop, 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 drop. And no matter what, bought up, bought up, really bought up. And now I don't think if there's any short left. So let's turn back to the analysis. Let me tell you why I think there's plenty of bull price action right now. If we check the actual Magnificent Seven, there's one thing that you can see. There's one thing this is the latest prints on Friday. There's one thing to my eye. There's one surprising thing. And as you can see, Nvidia has been since February has been rallying towards the earnings. Earnings is basically in I don't know if it's this week or next week, but it's in the upcoming days. We got this gap down on the DeepSeek day, and that gap is being destroyed. Everyone's buying Nvidia, and this is pushing the Q. Meta also. Look at this. Look at this. This is unbelievable. Just what the just all-time highs. This rip is unbelievable. And this is happening because earnings is also news are that basically I told you on the initial recap that meta investment in AI powered humanoid robots signal continue. And people is buying this. People is buying this narrative. If we check, Apple is chopping, Microsoft is chopping, Tesla is really struggling right now. It was pushed, but then since Trump president, it's really people is not buying the fact that Elon Musk is so involved in Amazon. It's pretty good, but I would say that it's bullish on the trend. But remember that these signals consume growth. They're starting to, but it's certainly bullish. Google is look at this gap down. So Nvidia and Meta are fueling the queue. But don't forget about dollar. Dollar is putting a lot of pressure to the stocks due to the tariffs and due to all these earnings. The 2-year yield, it's also being held above 4.2%. 10-year, it's also struggling a bit, but it's certainly bullish. We are seeing high yield corporate bonds being basically in a really strong trend. People is risk on. Treasuries are pulling back a bit, but are in this big range until basically the rates come down to normal. Banks are also pushing. Semiconductors are holding. We got ASML minus 3% Friday, ARM minus 3%. Micron technology pushed 4%, but as you can see, the semis are not particularly strong. So this is just again only Nvidia and Meta pushing the Nasdaq higher. So if we go back to the 1 hour, this was the new week's opening gap, and we left that way below. Way below. We pushed pretty damn hard, and we are breaking out, and we are so close to all-time highs that I think we have a lot of reasons to really be bullish on next week and until Nvidia earning. That's going to explode the market because we crossed really key structures that were being pushed down every single time, and now we are breaking out of those. We are in a pretty good spot, so close. Time highs are at 1% of highs that I really think they are going to squeeze everything because they are pretty well pushing down here at 20. So I wouldn't be surprised that the market just rips faces, even though the economic data and the situation of tariffs really, really. So how I recommend how my analysis involves positioning in this market. I'm going to share with you how I interpret this price action and how I will be positioned. I'm going to share that for you to analyze and for educational purposes. Remember. So the first thing that I usually do is what levels were broken. You can see we have last week high here that was pushed. So we have new last week high that is right here and new last week lows that down here. Have this range. This was the 1 hour inverse that was just on Monday and they got bought up. Then on Wednesday, again, the CPI. The CPI was unbelievable. We just recheck that. Because look at this. This was the CPI day. And on that day, I did the recap and I was trying to buy here, buy these bounce, but I was never triggered. I was never triggered, but it was a a huge, huge melt. So basically, due to this, first that I do is 1 hour. What kind of levels do we have here? Well, we have this inverse, and more importantly, we have this daily volume imbalance. We go to the daily, we just hide this. This volume imbalance is one that I was. So that volume imbalance coupled with some levels, that is going to bring me that here on 1 hour. So we have the volume imbalance of the daily with the consequent encroachment here, and then we have this last week high. Let me just move the inverse and try to highlight you. This is the zone of interest. So in this zone, what do we have? We have to go to the 15-minute that I like to trade, the narrative time frame, and we have that might be some sell side liquidity. We have also any fair value gaps. We have this inverse, and also we well actually we have this inverse, but I think I'm going. We have that one, and have also. So we have a pretty good zone. Check the 30-minute. Have one fair value gap. So I would try to watch price action at this level. So watch the price action at this level, because this kind of action, I think, is due to a pull. And I will not try to go in this first, because I think they are going to go down to liquid probability to catch or basically explode pulls a little bit. So these zones, and certainly this sell side zone at 21,900. Remember that this is 22,000. This is the line. So this is one of the first I would like to touch. These two are quite important. Fair value gaps, psychological levels, and also bouncing from the last week high. They might be some more aggressiveness to take the side liquid. So that, but I don't think we are going to see that anything can happen. Let's see if there's a new week opening up. Let's see things like that. But certainly, I don't want to just rip faces towards all directly. So that's the plan. I'm bullish on price action, but don't get me wrong. Economic data, it's so any negative catalyst that happens during the weekend, or tariffs, or things like that, are going to impact. And this rally, it's in my eyes a little bit fragile. We are seeing some knives, price actions. So anything can happen, but I would like to go into the trend with a little bit more better position. This was the liquidity that I thought they were going to load, but they only took sell side. There's a sell side here, but I think these two lows are protected. So with that scheme, that setup, I'm going to try to go in lower time frames, because I think they are going to continue buying anything. If they bought everything with these CPI and PPI negative prints, I mean, they are going to buy even more any catalyst happens. Going to be prepared. And don't forget about the dollar. Dollar is pretty dangerous right now. It's negative trend, but overall, the dollar pushed higher and might become again super strong. Tariffs continue coming in. So that's the setup. Really, really difficult week. So don't beat yourself if you lost money or you are very confused. I'm too, but I'm trying to be practical, to be nimble and adapt to the price action and price action. Certain things that have to analyze the market in every aspect. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this weekly recap every Saturday. And also from Monday through Friday, I upload weekly recaps, market updates, market recaps, and market summaries for you to analyze. Do your own diligence, do your own analysis, and try to find your best strategies and setup. I share everything with you. My trades, setups, analysis, my ideas, my other markets, my convergences, divergences. If you like this, welcome to the channel. But more than ever, be patient, be disciplined, and risk and manage your, because without that, you are not going to be. Stay safe, everyone. Take some rest this weekend, and remember that Monday, I think we have early close. So let's see you again on